Welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at, as per the title of this video, I'm going to be looking at the Bitcoin charts that are showing how far the Bitcoin bull market will go. I'm also going to be having a look at the wider markets to see exactly what's happening with the Bitcoin ETFs, the Ethereum ETFs, as well as the wider markets to see which direction the water is flowing for the Bitcoin price over the next coming weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So today's title of the video is the Bitcoin charts that are showing how far the Bitcoin bull market will go. And I'm going to start off with the first cycle here. The measure I'm going to make is that for each of the cycles, I'm going to measure from the bottom of the bear market to the price close at the halving, and then from that closing at the halving to the top of that bull market cycle. So if we go to cycle 1 here and measure from the bottom here to the close of the halving at this point, that's a 4.8x, i.e. 484%. So that's a 4.8x. And from the halving to the top of the bull market is 9,913%, so that's a 99x. So after the halving, as you can see, it really took off much greater than before the halving. And if we move to the second cycle, from the 2015 bottom here to the halving, there was 300%, 3x, whilst from the halving to the top of the bull market at 19,800 was a 29x, 2,914%. And the third cycle, from the bottom in 2018 at 3,100 to the May 20 halving, is 209%, so a 2x. And from the halving to the 64,000 was 570%, and to the 69,000 was 607%, so a 6x. And if we zoom out, we can look at these figures in the cold light of day and deduce some information which gives us a very good probability of what may happen between where we are and the top of the bull market, anywhere around here. So these figures are giving us a clue of where we're heading. So what we can see quite clearly is that in the first cycle, from before the halving to the top of that bull market, there was a 20x leverage to 99x. In the second cycle, there was a 9x leverage from before the halving. And in the third cycle, there was a 3x leverage from before the halving. So I'm just taking these figures here, 6 divided by 2, 29 divided by 3 to give us 9, and 99 divided by 4.8. So what we can see here quite clearly is that this figure seems to have, in the previous 3 cycles, has been going down, as well as this figure has been going down. But in the current cycle, this seems to have changed a little bit, because when we measure from the bottom at 15,400 to the halving here at around 64,000, that was a 3.1x, i.e. 316%. So when we put 3.1x here and we zoom out, we can now see that the pattern has now clearly broken from 4.8x to 3x to 2x, but now it's gone the other way at 3.1x. And the question is, will this pattern at the top be broken here? So the narrative that I want to develop here is that at no point did, after the halving, the price go less than before the halving. So here we can see quite clearly, after the halving, it went up higher than the 4.x. In the second cycle, it went up higher than the 3x. And in the last cycle, it went up higher than the 2x. So just based on that, the minimum that I'm going to put forward as a target for this bull market is going to be at least a 3.1x from the 64,000 where the price was at the time of the halving. So if we take that minimum from the 64,000 up to 3.1x, i.e. 310%, that gives us that minimum target of 265,000. And if you've been watching a lot of the YouTube videos like I have, you'll know that the consensus of opinion is very conservative, i.e. most people think we're going to top out around about between 100 to 150,000. And that is really based on what happened in the last cycle, when everybody was expecting the price to be much higher than the 69,000, and I don't know anybody out there who got this correct. Everybody's narrative was much, much higher, between 200 and 300. Point of that is that the market will do something different to what most people are expecting. And here, most people are expecting around about 100 to 150. And as I've shown you with the Fibonacci retracement, the previous cycles went up to the 2.36 on 2 occasions and the 1.618 on the other occasion. So if you wanted to use that as another barometer, well, that gives us a couple of more other targets. So this pattern that I've just shown you before and after the halving is giving us a price target of around 265,000, which is much higher than the consensus view. And if you want to use the Fibonacci retracement from the 69,000 down to the 15,400, it gives us 2 targets based on the previous 3 cycles. The first target is the 1.618. This is where one of the cycles topped out, and that is at 175,000. But if our minimum is at 265, that means there is a higher probability to hit the next target than this target, and that is the 2.36. And that is currently around 530,000. So by eliciting this information from the previous cycles and the measure of the Fibonacci retracement, it gives us 2 targets of 265 and 530,000. So let's see which of these 2 we hit, because they're certainly not the targets that the consensus opinion has out there. And we all know that the market does the opposite of what most people think it's going to do. So I hope you found that interesting. Okay, I'm going to move on to the main informations out there, so we are all aware of exactly what's happening in the background of Bitcoin to give us a wider perspective. The first thing I want to look at here is that the Bitcoin ETFs are now holding well over 1 million Bitcoin. That's $70 billion. And why is that significant? That's significant because the people who buy ETFs are people who are in pension funds and other long-term funds. So these are not your traders. They tend to buy and hold for the long term. And what that does to the supply is that it takes that supply away from other people who may well be trading. So the ETFs become the long-term holders rather than the short-term holders. And what that does is to create the supply crunch that we're all expecting to push the price of Bitcoin much higher. And people talking about the Ethereum ETFs, what we've seen is a little bit of a change of what's happening with the supply of Ethereum on the exchanges. And that is that those exchanges, since the ETF approvals, has seen an exit of $3 billion worth of Ethereum. And when you see large amounts of Bitcoin or Ethereum being taken off the exchange, that means that these people are the longer term holders. They have no intention of selling. The biggest reason for putting it on the exchange is to sell. And if you're not going to sell, or you have no intention of selling, then the chances are you're going to put it in a wallet to safeguard your Ethereum or Bitcoin. So by taking it off the exchange, you're reducing the supply. So we should see an increase in the Ethereum price coming up over the next coming weeks and months. Okay, moving on to the liquidation heat map, which is proving to be very accurate in terms of the price range of the Bitcoin price. We can see that the price keeps coming back down to these yellow zones here. And currently the lowest zone is around about the 66,800. So if the Bitcoin price wanted to take out those leverage players at that price around 66.8, then we can still expect the price to come back to the 66,000 level. And the top of that range is around about 69,800. So this is the range it's actually been flowing over the last few weeks and months. And looking at the Bitcoin tracker of which of these ETFs is holding the most number of Bitcoins, we can see Grayscale, which started off with 619,000 at the launch, has now been overtaken by BlackRock. So this happened last week when I showed you this chart, and now BlackRock is moving further and further away. So the next company to catch up to the Grayscale Trust is going to be Fidelity. They're currently at 164,000 Bitcoins. Okay, if we move on to the Bitcoin ETF overview, we can see that the BlackRock ETFs is now the #1 ranked, and Grayscale has now dropped to #2. And this shows us that over the last 7 days, why the price of Bitcoin hasn't been rallying as much as we'd want to. As you can see, there's quite a lot of red numbers here. And that's telling you that there is still quite a lot of selling going on. And the green numbers here are trying to counteract that, but it isn't enough at the moment. But it seems we're rallying up to around about 69,000 as I'm doing this video. But it's only a matter of time before we'll stop this kind of bleeding going on from the ETFs. Okay, moving on to the wider markets, we'll have a look at the dollar first to set the stage of what's happening with the other markets. So we can see on the monthly chart what we got, because we've just had a monthly close the end of May. What we've got is a tweezer top candle pattern here, and what that's telling us is that the momentum for the dollar to the upside is now reversing. A tweezer top is a reversal pattern to the downside. And what we've got on the monthly chart here, as you can see quite clearly, we made a high back in September 2022, we made a lower high, and now we made yet another lower high. So what we've got now is a momentum to the downside, and we expect this to happen to the dollar. If we move to the weekly chart, as I mentioned in the last few weeks' videos, what we've got is an evening star pattern developing here, and that is a green Marubozu strong solid candle here to the left, followed by two indecision candles. It's usually one. So what this is telling us, this is an extended evening star pattern, and then it's finished off on the right hand side with a solid red candle here. So we've got a classic evening star pattern, and this, as I mentioned at the time, is a bearish pattern, and we said that this is probably going to come back down and find some sort of a support here before eventually breaking down over the next few weeks and months. So we're having a little bit of a counter trend rally here, but these indecision candles are telling us that there isn't much momentum to the upside. And moving on to the SPX, with the dollar weakening, we can expect the continuation of the rise of the SPX. And what we've got is this mid-cycle correction that we would expect. And this is what happened when we came up to here. We confirmed the start of the new cycle at this point, and that was confirmed by this candle here, which broke the neckline at this point at around 52. And what we've got is that we've fallen below that level here and then bounce all the way back above it. And this is a very bullish development, because whenever you get a level, a support level, and the price goes above it and comes back and dips down below but captures it very, very quickly, that is a very strong sign that it wants to go much higher. And with this very strong bullish candle on the right hand side, you can see there's a reversal pattern now developed here. So we can expect the second part of the SPX to go much further, and that creates, if we zoom a bit wider there, so what this creates is a right translated cycle, i.e. making a higher high from before the midpoint somewhere around here. So we get a higher high before we get into the end of the cycle, and we have another end of the cycle fall for the beginning of a new cycle. So this is what we're waiting for. We've got plenty of room now over the next 4 weeks to make this higher high, and only time will tell how far high this will go. So with the dollar falling, the SPX increasing, and with the Bitcoin following the SPX more or less, that's giving us a clue of where Bitcoin might well be going. Okay, we've been looking at gold and the developments of these candles here, and we mentioned that when we got the close last month of this candle with a long wick at the top, telling us that there's bearish pressure, a lot of sellers came in at this point, and my narrative was that there will be some sort of consolidation here rather than a run to the upside. Obviously, we're clearly in a bull market trend here, but as part of the ebb and flow of the markets, we're going to go up, we're going to come back down, go back up, come back down again, and then we're going to keep continually doing that. But the trajectory, the overall primary trend is to the upside. So what we've got here clearly now is that we've had a second candle now close with a long wick at the top. So we have another shooting star candle, which is telling us that there's going to be a period of consolidation or some sort of a fall, either to this level here, which I mentioned in the last few weeks, of 61.8, that's at 2200. And if we did get a larger correction, it would make sense to come back down to the previous neckline around here. And that would be around about the 2100. So these are the two levels I'm expecting in the shorter term, the 61.8 at 22 and the neckline target of 21. And the gold on the weekly chart seems to confirm that narrative, because what we've got is that we've got a double top, which is the local double top now we've got with this big rally that we got there. So once you got a double top, that means that we're going to break this point here. So the 61.8 looks like a very high probability play, and there is obviously a good probability for it to come down to the neckline. So this again confirms these two targets, 2200 and 2100. And on the silver, what we've now got is a very strong gravestone doji candle here. This is a classic gravestone doji candle, and that is with a very long wick at the top with a very small body at the bottom. So this is a high probability play that we're going to be coming back down. And I've already marked in the 50% Fibonacci level at 29, and the 61.8, this box here, at 28. So the expectation here is that silver is going to come back down to 29 over the next coming days with a further target of about 28. And if we do have a deeper correction, then this is the level to come back down to, around about the 26. And that would make sense when we look left, because this is the level that we've actually broken through over the last few weeks. And although we came back and retested that level to go much higher, a retest of that is still on the table to try and shake people out at this point, because many people will be thinking that we've now topped out and we're going to go much lower. So shaking those people out here and then riding it all the way back and continue this trend to the upside in the current bull market. So silver looking very bullish on the longer term time frame, but in the shorter term you can expect some sort of a correction to 29 or 28. On the third target would be the neckline down here at about 26. And here's the 60-day cycle for Bitcoin. And what we've got here so far is a break of this red trend line. We got this head and shoulders and broke out with this green candle there. And if I take that red line out, and as I showed you in the last week's video, what we've now got is a larger inverse head and shoulders now playing out. So just to go back to that, what we've got is a left shoulder here, we've got a head, and what we're forming here is a little bit of a stunted right shoulder, which can extend all the way up to here. So we'll see how this develops. We could quite easily go sideways, which to me is the more preferred path, because then you have a very strong consolidation in this range. The greater the consolidation, i.e. the accumulation going on, the greater the power to go to the upside. But if we were to break up here and follow the SPX with a right translated cycle, so that would mean that the high that we had just before the midpoint here, for us to have a right translated cycle, we need to get above that. And if we did get that, then that would be a very strong signal that we're going to go much, much higher. And at the moment, what we've got is a staircase move by Bitcoin. And that is, we've gone from our 60-day cycle low on day 42. We've gone above this target that we had at 65. And the second target that confirms the 60-day cycle low at day 42 was the 67,000. So we've gone above that 67,000 all the way to 69, which is obviously a very natural place for a resistance. And we've come back and used the previous resistance here now as a support. And this is what I was mentioning in the last week's videos, that once we get above the 67, we really want to use that as a support, and that the probability is that we're going to be really in this range, 67 to 69. And let's see if we break here. So the real two possibilities here are to create a right translated cycle in this cycle, or continue with this consolidation into the next cycle. And if we didn't make a right translated cycle here, then the left shoulder point is at around about 60,000. So this would make sense at around about 60,000 and then come up here. And then that would be the perfect symmetrical formation of the right shoulder with the left shoulder on this side. And I think the more sideways we go, that is more preferential than breaking up here, because the next part of the bull market is going to be the parabolic phase. And I showed you that of where that trigger will be, and that is the red line of the pi cycle. As I showed you in last week's video, if you haven't watched it, go and watch that video, and it shows you in detail why this is the start of the parabolic move. Once we get up to here, whatever that's going to be, currently it's at around about 86, 87,000. But wherever that's going to be, if we hit it here at this point in this cycle, then we know that this is going to go much higher, because this is the start of the parabolic phase, the end phase, the last phase of the current bull market. But if we were to consolidate further into another next cycle, then the pi cycle is going to be much higher. And with a stronger base down here, what we'll have a lot more fuel to go much higher by having a greater consolidation over a greater period of time. And currently, from the low point of the cycle, i.e. the start of the cycle here, we're on currently day 33. So what we've got is plenty of room for the price to decide which way it wants to go, whether it wants to consolidate or it wants to go much higher. But certainly for me, having made this head of the head and shoulders pattern, it seems with a very low probability will come back down to 56. The higher probability is 50-50 between breaking up or going sideways. The low side is not much of a probability at the moment. And now it's time for this. This is a favorite part of our videos, looking at the Brexit indicators and just to give us a barometer of exactly where we are in this current bull market. And for those people who think we've topped out, this is a way of finding out where we are in the bull market by looking at the various indicators, and today is the time for the MVRV Z score. And this is it here. We can see the red selling zones at the top and the green buying zones at the bottom. And these are the peaks of the previous bull markets, as we've seen here. And the general trend, as you can see, is to the downside. And this is where we're currently at. And this is how far we've still got to go. So this is confirming quite accurately that we are nowhere near the top of the bull market, that we are nowhere near having topped out yet. We've got plenty of room to grow here, and that aligns very well with our parabolic phase, with the pi cycle red line and the charts I showed you at the beginning of this video, comparing the performance of Bitcoin before and after the halving. So this is once again confirming that, and only time will tell what happens in the future. And before I go, I want to show you the weekly stochastic RSI, which I showed you in the last week's video. And I've been mentioning over the last few weeks that once we get above the 20 level here, that is our signal that the market wants to go higher. And as you can see on the weekly close now, on both the red and the green lines down here, we're ready to go. We're on the starting blocks. But please be aware that this can easily go all the way up here, while at the same time the price is going sideways. So this can happen. It's not telling you that this is definitely going to go here. This is a momentum indicator. So the momentum might be to the upside, but the price may only push up to a certain amount, and this is why the probability of it hitting the 56 is very low. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.